You were listening to chartingwealth.com for Thursday, the 29th of March, 2018. Want to thank all of you for your encouragement in our continuing writing the book. It is coming together. Charting Wealth, the book, is coming together quite nicely. We started it a couple of years ago and then sort of floundered for a while, just not liking the pace and sort of where things were going. And then you encouraged us to continue pushing on it, and we have made a lot of headway lately, and the book will be coming out in the near future. I'm actually putting together some of the last chapters, really sort of sorting everything right now. I feel like we've gotten most everything written, and we're just sort of getting it to editing and proofing and compiling it all together, and we think you're going to like it a lot. Should have it out in the next month or so, so we'll keep you posted on that. Don't forget, my friends, that at the end of this week, we will end the quarter and we will be putting out the special quarterly training. Now, those of you who've taken it before, we've got nothing but 5-star reviews about this training. It's absolutely free. We provide it as just another thing that we do here, but our quarterly chart, we also provide you with a copy of the quarterly chart. Those of you who are signed up and receive what we do on a daily basis, that is our daily market reviews, go to chartingwealth.com and sign up, and you will be on the list to receive it. We will do it after the market closes on Friday, after we do the comprehensive review and forecast. And basically what this helps us do is chart, and it's pretty incredible, this quarterly chart that we've come up with. Would have gotten you out of the big drops in the market starting in 2008, would have gotten you into the market shooting up in 2011, would have gotten you out of the market when things started crashing back in 2000, would have gotten you back into the market around 2004, 2005. I mean, again, it is an incredible chart. We'll talk a little bit about the Trump effect, about the latest crossover going up and how things have been beautiful for the last going on 5 quarters. So again, we're going to have all of that for you. Now, to do that, go to chartingwealth.com and become a subscriber. It's free. Let's jump into these charts today. What do we see going on? Another down day for stocks. The S&P 500 down 0.29%. The Qs down also 1.15%. We have a strong down candle that's forming this week. Derivative oscillator's been losing a little bit of that downward momentum, but the price percent oscillator, our main indicator, hammering down. We look at the 2-day chart. What do we see? We see that price movement is well below the 2-day trend line. We'll be redrawing that trend line as soon as the latest candle completes drawing. It's just the first day of the latest 2-day candle. It will finish drawing on Thursday. Another red down candle, price movement well below the weekly and the 2-day. What do we see on the 4-hour chart? Well, we see that the price percent oscillator has actually headed, the derivative oscillator is headed up. Price percent oscillator is still hammering down. Again, price movement well below the weekly trend line, although what we've really seen is sort of a flattening there as far as our Heikin-Ashi candlesticks goes. Looks like we're bottoming about 260.50, something like $260.50 or so. So again, we'll keep an eye on that on the short chart on the S&P 500. The price percent oscillator flipping over there does give us, the derivative oscillator flipping over there does give us some pause for concern. We'll continue to keep an eye on that. Now let's go to the QQQ, the NASDAQ 100. What do we see happening there? We're into our second week of strong down movement. Derivative oscillator gaining downward momentum. Price percent oscillator also gaining downward momentum. We look at the 2-day chart, and of course we're going into our 5th candle. So far that's 9 days. When that gets drawn completely, it'll be 10 days of down movement. Of course, price is well below the 2-day trend line, and once we start drawing a weekly trend line, it will be below that. We don't have a second week yet, so we can't draw a weekly. We look at the 4-hour chart. What do we see? Well, we'd seen things kink up there up to the 27th, and then we see things started rolling over in the afternoon on the 27th. That was Tuesday. And of course, big down movement in the morning on Wednesday, a little bit of a up movement in the afternoon. Again, still down. Price well below the 2-day and what would be the weekly trend line. So we'll continue to watch and see how those things go. That is where we are on the Qs, and that is the NASDAQ 100 and the SPY S&P 500. So again, stocks down. What would you expect bonds to be doing? Well, they're going up as one would expect. We may have a weekly vertical crossover by the end of the week, and that is on the 20-year bonds, TLT, going up. Price percent oscillator is heading up toward the red signal line. Derivative oscillators already showing green, so we shall see what we shall see going into the third week of up movement. One would expect, as the stock market goes down, money to flee into bonds, causing them to rise in value, at least the ETF. And we see on the 2-day chart, remember we had that 2-day crossover all the way back on the 5th. And what really happened is things just slid sideways until around the 2-day candle ending on the 15th. Popped up there, then sort of sideways and down, laying down on the 2-day trend line, and then up since then, starting on the 23rd. So we'll continue to keep our eye on things. Derivative oscillator moving up, price percent oscillator moving up nicely also. What do we see on the 4-hour chart? We see where the price percent oscillator bounced off the red signal line back there on the 27th. Strong price movement up in the afternoon on Tuesday. Strong up movement in the morning on Wednesday. A little bit of a pullback in the afternoon. Derivative oscillator gaining energy. Price percent oscillator not going quite as steeply up as it had been back on the 27th, but still up on the 28th. So what do we see now as we go into our last chart? We're looking at gold. Gold down big for the day, 1.38%. And we see what looked like was going to be a crossing over going up on gold is sort of bounced over heading down at this point. Very interesting with that big down movement in gold. We see the derivative oscillator pretty much flat. Price percent oscillator headed down. Got a big long wick on top as gold peeled off some of that strong up movement. We'll see how things go the rest of the week. We still have Thursday and Friday. We've just made it through hump day so far. Let's look at the 2-day chart, see what we see. Well, of course, it crossed over going up strongly for 2 candles, both the 2-day candle ending on the 23rd and the 2-day candle ending on the 27th, and then pulling over strong down on the 28th. We'll see how that candle ends up. It won't finish drawing until the end of the day on Thursday the 29th. But again, very interesting as we watch that happen. And we'll see if we get a crossover there. What's going on the 4-hour chart? Well, it is heading down. We have a crossover in the afternoon after strong up movement for a few days prior, and then started peeling off on the 27th. Of course, the derivative oscillators flipped over to the negative along with the price percent oscillator. Typically means stronger movement when you see both of them move over at the same time, a crossing on the derivative price percent oscillator and the derivative oscillator flipping negative. Usually means that's going to be a longer sustained move. We'll see as the market develops more on Thursday and Friday. Folks, that's where we are as we end the day. On Wednesday, go into Thursday the 29th, and then Friday the 30th, the last day of the month, where again we will be preparing that quarterly end review for you. Thank you so much for being with us. We love to hear from you. Answering a lot of emails today, so if you've got questions, concerns, please write to us, cw@chartingwealth.com. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.